Good morning, traders, and a very warm welcome back to Market Meridian, your trusted go-to source for actionable, real-time intraday Forex and commodities insights that you can put to use in your trades today. I'm your host, Eric, and it's a pleasure to guide you through another day of market opportunities. Today is April 23rd, 2026, and we are going to break down every key level, every high-probability trade setup, and every critical risk management rule you need to know to navigate the global markets with confidence and clarity. Before we dive in, I want to emphasize one important point. Everything you hear today is for educational and reference purposes only, not formal investment advice. Always trade responsibly, never risk more than you can afford to lose, and trust your strategy. Let's kick things off with the precious metal sector, where gold is undoubtedly the star of the show this morning. Gold, our spot gold, XAU USD, is currently trading within a crucial range between 46.50 and 48.50, and this range is going to be our North Star for intraday trades. Let's break down the key levels clearly so you can mark them on your charts. Our primary resistance levels come in at 48.50, followed by a stronger resistance at 4,906.50, and then a major resistance level at 4,994.91. Breaking above that could signal a strong bullish momentum shift. On the support side, we are closely watching 4,649.66 as our first line of defense, followed by a secondary support at 4,601.07, and finally, a 463.48 that has held strong in recent sessions. Now, for your intraday setups, let's keep it simple but effective. If gold price pulls back and stabilizes between 46.49 and 46.60, look for confirmation signals like a bullish candlestick pattern or a bounce off the support level. You can consider a long position. Set your stop loss just below 4,600 to limit potential losses, and aim for two target levels. 4,800 as your first take profit, to lock in some gains, and then 4,850 as your second target if momentum holds. Conversely, if gold rallies up to the 48.40 to 48.50 range and shows clear signs of rejection, such as a bearish candlestick, a drop in volume, or failure to break above the resistance, a short setup is worth considering. Set your stop loss above 49.07 to avoid being caught in a false breakout, and target 47.80 first, then 4700 if the downward momentum continues. And a quick, but vital, note. If gold breaks decisively above 4,907 or below 4,600, forget the range trading strategy. This means a strong trend is forming, and you should follow the trend rather than fighting it. Moving on to silver, which is showing a bit more volatility and choppiness compared to gold this morning. Silver, XAG USD, hasn't yet established a clear trend, so we're expecting sideways action with some swings throughout the day. Let's outline its key levels to help you trade. 89.57 as a major resistance that could trigger a bigger move if broken. On the support side, we have 63.92 as the first support, 60.53 as the secondary support, and 57.81 as the final support before a potential deeper decline. My advice for silver today is to expect sideways action with plenty of volatility. Stick to range trading strategies unless we see a clear, confirmed breakout above 83.43 or a breakdown below 60.53. Trying to trade silver outside of this range without confirmation could lead to unnecessary losses, so patience is key here. Next up, let's cover platinum and palladium, two precious metals that often fly under the radar but offer great opportunities for traders who pay attention. Starting with platinum, it's currently testing the key 2000 mark, which is a psychological and technical level that could determine its short-term direction. Platinum's resistance levels are 2093.8 as the first resistance, followed by 2146.8 as a stronger resistance that, if broken, could open the door to further gains. On the support side, we have 2002.5 as the first line of defense, closely tied to that 2000 mark, followed by 1964.2 as a secondary support, breaking below that could signal a bearish shift. Now, palladium. Its key level to watch is 1,516.64, If price falls below this level, palladium turns bearish. Palladium, keep an eye on volume. Low volume could mean false moves, so wait for confirmation before entering any trades. Now, let's shift gears to the energy markets, which are always a hot topic for traders, starting with WTI crude oil. WTI has been showing some strength in recent sessions, and today we are focusing on key levels that will guide our intraday trades. Our resistance levels for WTI crude are 92.76 as the first resistance, 95.86 as a stronger resistance, and 99.49 as a major resistance that could trigger a significant bullish move if broken. On the support side, we have 86.03 as the first support, a crucial level that has held multiple times, 82.40 as the secondary support, and 79.30 as the final support before a potential deeper pullback. Our bias for WTI today is slightly bullish above 86.00, so if price pulls back to around 86.00 and shows signs of stabilization, like a bullish bounce or strong buying volume, look to enter a long position. Set your stop loss just below 82.40 to protect against a sudden drop, and target 90.00 as your first take profit, then 92.76 as your second target if momentum continues. If WTI rallies up to 92.76 and stalls, showing signs of resistance like a bearish candlestick or a drop in buying volume, a short trade makes sense. Set your stop loss above 95.86, and could impact price. Brent crude, the other major crude oil benchmark, is also trading in a range today, between 94.51 and 101.80. This range has been holding for the past few sessions, so we're expecting more range-bound action unless we see a clear breakout or breakdown. Let's outline Brent's key levels. Resistance hits at 101.80 as the first resistance, 105.12 as a stronger resistance, and 109.09 as a major resistance that could lead to a big move if broken. On the support side, we have 94.51 as the first support, the lower end of the current range, 90.54 as the secondary support, and 87.22 as the final support. My advice for Brent today is to stick to range trading strategies. Buy near 94.51 if it stabilizes, sell near 101.80 if it shows resistance, until we see a clear breakout above 101.80 or a breakdown below 94.51. Trying to trade Brent outside of this range without confirmation is risky, so patience is key here as well. Now, before we dive into the major Forex pairs, where the action is for many of you, whether you're a seasoned trader or just starting out, please take a quick moment to subscribe to my channel. Subscribing ensures that you get my market data, trade setups, and daily forecasts instantly, right when they're released, so you never miss an opportunity. It's free to subscribe, and it helps us keep bringing you the high-quality content you rely on. Thank you so much for your support. Now, let's get into the Forex pairs. Starting with Euro to US dollar, which is in consolidation mode today, meaning it's trading within a tight range without a clear trend. EUR USD's resistance levels are 1.1785 as the first resistance, 1.1826 as a stronger resistance, and 1.1859 as a major resistance that could signal a bullish shift. On the support side, we have 1.1711 as the first support, 1.1678 as the secondary support, and 1.1637 as the final support. The play here is simple and straightforward. Buy on dips toward the 1.1710 level, near the first support, if it stabilizes, and sell on rips toward the 1.1785 level, near the first resistance, if it shows signs of rejection. There's no need to overcomplicate this. Stick to the range, look for confirmation, and avoid forcing trades. Next, pound sterling to US dollar, which is leaning slightly bullish above the 1.3475 level. This bullish bias is based on recent price action and technical indicators, so we are focusing on long setups near support today. GBP USD's resistance levels are 1.3544 as the first resistance, 1.3578 as a stronger resistance, and 1.3613 as a major resistance that could open the door to further gains. On the support side, we have 1.3475 as the first support, a critical level for maintaining the bullish bias, 1.3440 as the secondary support, and 1.3406 as the final support. Look for long entries near that 1.3475 support level. Wait for confirmation, like a bullish candlestick or a bounce off a level. If it holds, we could see a move toward 1.3544 as the first target. If 1.3475 breaks, the bullish bias weakens, so be ready to adjust your strategy accordingly. USD or JPY is another major pair to watch today, and it's holding a bullish structure above the 158.83 level. This bullish structure is supported by technical levels and market sentiment, so we are cautiously bullish on US dollar to Japanese yen today. Its resistance levels come in at 159.78 as the first resistance, 160.19 as a stronger resistance, and 160.73 as a major resistance that could trigger a bigger bullish move. On the support side, we have 158.83 as the first support, critical for maintaining the bullish structure, 158.29 as the secondary support, and 157.88 as the final support. Only consider shorting US dollar to Japanese yen if we see strong rejection at the 159.78 resistance level. Signs like a bearish candlestick, high selling volume, or failure to break above the level. Otherwise, the bias remains bullish above 158.83, so focus on long setups near support. USD CAD is a pair that's closely tied to oil prices today, so if you're trading this pair, you need to keep a close eye on WTI crude movements. They go hand in hand. Remember, when oil prices strengthen, the Canadian dollar, a commodity currency, tends to follow, which puts pressure on US dollar to Canadian dollar and pushes its price lower. Conversely, if oil prices weaken, US dollar to Canadian dollar tends to rise. Let's outline USD CAD's key levels. Resistance is at 1.3680 as the first resistance, 1.3703 as a stronger resistance, and 1.3728 as a major resistance. On the support side, we have 1.3632 as the first support, 1.3607 as the secondary support, and 1.3584 as the final support. Keep an eye on WTI moves throughout the day. They'll be the main driver of USD CAD's price action. If WTI strengthens, look for short setups on US dollar to Canadian dollar near resistance. If WTI weakens, look for long setups near support. Now, let's do some quick hits on Australian dollar to US dollar and NZD USD, two pairs that are closely linked to risk sentiment and commodity prices. Both pairs are range-bound today, meaning they're trading within tight ranges without a clear trend, and they're highly sensitive to changes in global risk sentiment. Starting with Australian dollar to US dollar, its resistance levels are 0.7186 and 0.7215, while its support levels are 0.7129 and 0.7101. For Australian dollar to US dollar, stick to small range trades, buy near support, sell near resistance, and avoid overtrading, as volatility could be low. Now, NZD USD, its resistance levels are 0.5922 and 0.5946, while its support levels are 0.5873 and 0.5848. Like Australian dollar to US dollar, NZD USD is range-bound, so focus on small, high-probability trades within these levels. Both pairs can also be influenced by economic data from Australia and New Zealand, so keep an eye on any breaking news from those regions. And finally, US dollar to Swiss franc, which is slightly bearish within its current range today. There's no strong trend forming yet, so we are focusing on range trading for this pair as well. USD CHF's resistance levels are 0.7832 and 0.7854, while its support levels are 0.7783 and 0.7756. The bias is slightly bearish, so you can lean toward short. Setups near resistance. but always wait for confirmation before entering. Remember, no strong trend means we need to be patient. Don't force trades, and stick to the levels we've outlined. Before we wrap up today's forecast, let's go over Market Meridian's standard risk management rules. These are non-negotiable, traders, and they're the key to long-term success in the markets. First and foremost, risk no more than 3 to 5% of your total trading capital per trade. This means if you have $10,000 in your account, you should risk no more than $300 to $500 per trade. This protects you from big losses that can derail your trading journey. Second, use hard stop losses for every single position, no exceptions. A hard stop loss is a predetermined level where you exit the trade if price moves against you, and it's the best way to limit your losses and protect your capital. Third, take partial profits at your first target, then let the rest of your position run with a break-even stop. This way, you lock in some gains while still having the potential to profit from a bigger move. If price hits your first target, take 50% of your profits, then move your stop loss to your entry price to ensure you don't lose money on the remaining position. Fourth, avoid overtrading. Limit yourself to a maximum of 1 to 2 setups per symbol per trading session. Overtrading leads to poor decision-making, emotional trading, and unnecessary losses. So quality over quantity is key. And finally, stay cautious during high-impact news events and volatile hours. Events like non-negotiable, non-farm payrolls, interest rate decisions, or geopolitical news can cause sudden, sharp price moves, so either avoid trading during these times or reduce your position size to minimize risk. Don't force a trade if the market is choppy or unpredictable. Patience is a trader's greatest asset. That's your complete daily forecast for April 23, 2026, traders. To recap, we covered precious metals, gold, silver, platinum, palladium, energy markets, WTI and Brent crude, and all the major Forex pairs, with clear levels and actionable setups. Remember to stick to the levels we outlined, follow the trade setups with confirmation, and always prioritize risk management above all else. If you missed any details, don't worry. We'll have the full breakdown, including all the levels and setups, on our website, so you can reference it anytime. And once again, thank you so much for subscribing to my channel. It means the world to me, and it ensures that you get my data, forecasts, and trade setups instantly, right when they're released, so you never miss a trading opportunity. Thanks for tuning in to Market Meridian. We'll see you next time with another actionable forecast, and until then, happy trading, stay disciplined, and may your trades be profitable. Thank you again for subscribing. Your support helps us keep bringing you the best possible market insights, and we can't wait to help you succeed in the markets.